Very good morning and a happy Wednesday. Welcome to today's episode of Morning Well. Three things that we will talk about. It's Singles Day, Amazon's EU antitrust, and now European Union needs to target average inflation. Investors continue to reverse some big bets on work from home economy, but they also dial back the vaccine powered optimism for travel companies. Blue chips represented by the Dow Jones added about 262 points to climb a bit closer to 30,000, ended at 29,420. But the broader market fell back with the S&P 500 off by about 0.1%. Some big Monday gainers paired some gains, notably cruise operator Carnival was down 13%, Norwegian Cruise was off by about 6%. Booking Holdings and Wind Resorts also dropped about 5%. Technology stocks though didn't benefit. They continued a correction that started during Monday's broad market surge. The Nasdaq Composite dropped about 1.4% on Tuesday, including more than 3% declines for Amazon and Microsoft. In terms of sectors that did well, energy was up about 2.52%. Consumer staples and industrials also did well. In terms of underperformance, communication services, consumer discretionary and information technology were the sectors that dragged the S&P lower. Treasuries fell. The 10-year yields were up about 3 basis points to about 0.95. Dollar was mixed against the G10 basket, with the pound leading some gains and the Swiss franc and the loonie underperforming. Gold and oil advanced. Asian stock futures are looking to a positive open. Following its sharp rise on Monday, Pfizer shares fell about 1.3%. Airline stocks, including Delta Airlines and Southwest, continued to climb though, while shares of technology companies, including Alphabet and Zoom, declined again. Shares of drug maker Eli Lilly rose about 2.9% after US health officials authorized the use of an antibody drug in early stage COVID-19 patients. It's Singles Day today, 11th of November, 11/11, and this year a record number of brand names from Apple to Nike are betting that after months of COVID-enforced restrictions, China is ready to spend. Alibaba is expected to blow past last year's record of 38 billion in total, relying this year on increased online promotions and events featuring pop stars like Katy Perry. The world's biggest 24-hour shopping binge will also serve as the best barometer so far of the country's economic recovery. Amazon was down about 3.46% yesterday, and here is what the European regulators are going for. So fundamentally, Amazon has three businesses. Its cloud operating business generates about 40 billion in annual revenue, and it would easily rank about 80 in a Fortune 500 company, just that business. And that is well below the 68.6 billion generated by Amazon's third-party businesses for the 12-month period ended September. That's more than 5 times the size of eBay. Amazon's biggest business remains the stuff it sells itself, which now generates about 128 billion in annual revenue. But Amazon's days of playing both sides of the retail fence may be numbered. The European Union's top antitrust authority issued charges on Tuesday, accusing the company of using non-public data it gathers from third-party sellers to unfairly compete against them. It is also looking on how Amazon distributes the buy box, which often determines who gets the sale between its third-party sellers and its own goods. So this is what the regulators are kind of looking into to see whether they are using data unfairly to promote their own goods, right? Fundamentally. Lastly, the ECB should target higher average inflation unless house prices are soaring and governments must spend their way out of a recession. This is according to economists attending the institution's annual forum. ECB's President Christine Lagarde will open this year's event on Wednesday, with Federal Reserve Governor Jerome Powell and Bank of England Governor Andrew Bailey joining her over the next 2 days. Normally held at a luxury hill resort in Sintra, Portugal, this time it's online because of the pandemic. We'll watch for any specific comments, but I don't see any surprises coming out of a meet like this because monetary policy is loose and will probably remain loose for an extended period of time. And talking about inflation, at least in the Eurozone, is being a bit too ambitious because we have not got the basic inflation rolling for many years now. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.